Frontline stocks trade in a range ahead of the weekend and amid tariff uncertainties. But mid-caps eke out gains. Industrials and energy are the prominent gainers, while IT is the big drag.
Hexaware reports a soft quarter with almost no quarter-on-quarter growth, but the company sees business as resilient and growth expected to be back ended in 2025 with an expected movement in margins.
A sharp jump in job losses likely prompts US President Donald Trump to ease off the Doge pedal. He tells CNBC-TV18, he tells the cabinet members to keep the people they need, adding that Elon Musk should use a scalpel, not a hatchet.
The SEBI chief Tuhin Kanta Pandey says the regulator is willing to engage with foreign investors and take steps to ease regulations where required, as India needs both domestic and foreign capital. He also says that the SEBI board members need to be transparent about their conflicts of interest. We are counting down to the end of what has been a good week for the bulls. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Patakia. With me as always is Mangalam Malu. And looking at how the handover was, Mangalam, from Wall Street, it is not as bad as was feared because the screen is still in the green.
The screen is still in the green. You know, one would call it bulls survived this week. Let's put it that way instead of saying bulls are back or all of that, because we've seen a massive amount of drubbing. So bulls doing well for the last 3 trading sessions has given them the leeway to survive another week. And what has given them the biggest push? It is Reliance. You just pull up the intraday chart of Reliance. All of, yesterday it was the top contributor, and right now it opened with a bit of a flattish sort of tinge and thereafter kept going higher, currently with a gain of almost 3.5%, 4% in, the last couple of trading sessions. And as a result of which, after having corrected for about 15% over the last 12 months, the stock has come back. Yesterday, when we were speaking, the monthly losses for Reliance were close to around 6%. Now that has been pared to about 1% itself. What is it that is making Reliance so resilient, and what is it that brokerages are liking about it? Yesterday, we had Sudarshan join us to tell us about 2 brokerages being bullish on Reliance. Today, we'll get him once again to get him to speak about Macquarie, which is bullish on Reliance as well. But as we do that, as we get Sudarshan to talk about Macquarie, before that, let's talk about one of the stocks which is under pressure. That's Hexaware Technologies. That's because the company's reported a soft set of fourth quarter CY24 numbers. Now, you'd wonder, why are we talking about fourth quarter CY24 now? Because this is a recent listing, remember? So they have, the leeway to report their numbers a lot later. The company did that. This morning, we spoke with the management who expects the margins to improve meaningfully from here on to over 17% in this calendar year and 18 to 18.5% in the medium term itself. But as of now, the weakness in the fourth quarter is what the street does not like, as a result of which the stock, which opened largely flattish, kept seeing a sell-off, at one point was lower, and now is at the lowest point of today's trading session so far. Let's hear out what the management of Hexaware Tech had to say.
Margins, you're right, we are going to be improving our margins very meaningfully from here. From a full year perspective, we reported a margin which was in the range of 15.9%. Operating margin EBITDA, we expect that to improve to 17% plus in 25, and it will further improve to 18.5 to 19% over the medium term of 3 to 4 years. Yeah, so it will start reflecting from April to June quarter onwards, so which is Q2 for us. So you'll see that the deals will start ramping up from a Q2 perspective, but the full impact of that will get reflected from Q3 onwards, which is in the second half.
The management of Hexaware, its first quarterly result after it relisted on the bourses recently. The street not liking the performance, now 7% lower on Hexaware Technologies. But we were on the subject of Reliance Industries. Almost 90% of the analysts having coverage on the stock have a buy recommendation on it. And Sudarshan is here to tell us the most recent upgrade that has come in for Reliance. Sudarshan.
So you're seeing a sharp move in Reliance Industries for second straight day. It's on the back of continued positive brokerage notes. Yesterday, we saw 2 positive notes. One was from Kotak, which had upgraded the stock to buy, and target was 1400 per share. And Jefferies, too, maintained buy call with a target of 69. And today, Macquarie has come out with a note, and now it has upgraded the stock to outperform. And here, target is 1500, implying an upside of nearly 20% from current level. So what does Macquarie say? It says it has upgraded the stock because it's expecting few incremental positives over next 6 to 12 months. Also, it says that it has underperformed MSCI index by 18 percentage point and Bharti Airtel by 60 percentage point in last 1 year. Now, it expects over FY25-27 EPS CAGR in the range of 15 to 16%, and that is against mere 2% EPS CAGR over FY23-24. Now, as per Macquarie, what would be the key catalyst? It says better earnings momentum. Second, like Kotak and Jefferies, Macquarie too expects that if there is any statement related to potential geo listing, that would also aid the stock. And last is gradual commissioning of new energy capacities. So these are the key catalysts that might work for Reliance Industries. And obviously today also stock is up more than 3% after yesterday's 3% move.
Yeah, I would love to see, the contribution chart. Sudarshan, thank you so much for joining in. The Nifty is now marginally in the red, and that's because the Nifty bank is seeing a bit of a sell-off. It's down about 150 points. We have the IT index, which is also pressuring it on the way down. But the contribution chart tells you that it is Reliance, which is single-handedly holding the Nifty's gains right now, or limiting the Nifty's losses itself. The IT index at the low point, Reliance up 65 points for the Nifty. So had it not been for Reliance, we would have actually been below the 22,500 mark itself. And speaking about banks and the reason why they're under pressure, sources tell CNBC-TV18 that the RBI is currently examining cases where co-lending is resulting in higher rate of interest for the borrower. Ritu joins in with more details on this one and what it implies. Ritu.
Well, yes, the Reserve Bank of India is tightening its scrutiny of co-lending agreements. We understand from sources that the regulator is closely examining such agreements, co-lending and otherwise, especially in cases where borrowers may be facing higher interest rates because of these partnerships. So, for instance, one concern is that instead of offering borrowers the weighted average rate of the two lending partners, some agreements are reportedly charging a higher rate, a practice that the regulator is not too pleased with. Now, we also understand from industry participants that the Reserve Bank of India has expressed its discomfort over co-lending partnerships with unregulated entities like fintechs, and this scrutiny is also coming at a time when co-lending is seeing increased traction, especially between two NBFCs and between fintechs and NBFCs in segments like unsecured loans, where the industry is seeing rising delinquencies. Now, according to a CRISIL report from last year, of the 1 lakh crores of assets under management under co-lending partnerships, about a third was from personal loans alone, although this number likely came down since because of the higher risk weights. Now, importantly, there are no explicit guidelines that disallow such partnerships, but there are regulatory grey areas. While you have the digital lending guidelines, the 2018 and 2020 guidelines on co-lending between banks and NBFCs for priority sector lending are silent, for instance, when it comes to NBFC to NBFC co-lending. Now, this also isn't the first time that RBI has raised these concerns. We understand that last year as well, the regulator had written about these issues to specific lenders, urging them to strengthen underwriting standards and enhance the monitoring of these kind of deals. Tech integration between banks and NBFCs has also been highlighted as a potential operational risk. But for now, it looks like RBI is stepping up its oversight. Whether this results in directions to specific entities only or more than that, we'll have to watch out.
Ritu, thanks a lot for that update. We take a short break, but before we do that, where do we stand when it comes to women's leadership and progress in India? The question is more pertinent since we are celebrating International Women's Day tomorrow. At the close, the Gender Gap Index uncovers key insights, while the Future Female Forward Charter sets the roadmap for real action. Be part of the movement. Tune in on the 10th of March, 5:30 p.m. only on CNBC TV18. Take a short break. Back on the other side. Welcome back onto Corporate Conversations. Then Galaxy Surfactants is the management we'll be in conversation with. The company has entered into a strategic collaboration with one of its global customers for providing EPC services. Now, the collaboration is mainly for commissioning of performance surfactants and specialty ingredient plants overseas. Now, to discuss more about this partnership, we have Vajnath Kulkarni, who is the Executive Director and the Chief Operating Officer of the company, joining us. Mr. Kulkarni, good afternoon. Thank you for joining in. If you could tell us more about this business or this tie-up that you have had. are you venturing into the EPC business, or are you only going to be supplying key materials from the company onto the plant? If you could clarify that first up.
First of all, very good afternoon and big thanks for having me on this show. Yeah, as far as this particular strategic cooperation with this one of the key global client is on providing the full EPC solution. So it includes technology, know-how, setting up the plant, commissioning, and eventually getting into operations. So it's a full package on which we have aligned on the strategic cooperation with this global account. And so it is not just some supplies of some parts, etc. It's a fully integrated solution that we will be offering to them.
What does this mean in terms of the company's revenue here? Because there will be a significant amount of resources in terms of manpower, strategic know-how, consultancy that you would be doing for this client of yours. So in terms of EPC business, what is the likely revenue from this project that you're undertaking?
Yeah, so first point I would like to clarify that this will be in the core area of surfactant and specialties. So this is the core line of business, and we have our full-fledged in-house new projects and technologies process, which is very capable and competent, and last 3 decades we have been setting up such plants for ourselves. So in this strategic cooperation, we will be offering this full service to them based on the competence that we have built in-house with our team of various engineers in this new projects and technologies process is concerned. As far as the specific numbers related to the EPC value or the revenue, we will not be able to disclose the information on that. But I think that my message clarifies that this is clearly built on a very strategic long-term understanding with the client, and we'll be basically building on our own core competence, which we have been doing for almost last 3 decades. Yeah.
Let me get this right, sir, that you are basically building a plant for one of your clients, and the raw material that you typically give it to your client will now be procured by the client directly from the plant that you will be building for them. Is that correct?
So the current declaration that we have made is up to the getting in the plant into the operation as a full EPC partner for them, including technology, know-how, supply, everything up to operations. And as we have mentioned in our disclosure, the post-operation, what the strategic alignment will be is under discussions. And at right point in time, we'll come back to you and we'll declare that more clearly.
What we're trying to understand is that what does this do to your business? Because, you know, typically when you are helping a client, secure something that you would be giving to them, it's benefit to the client, right? What is the benefit to Galaxy Surfactants from this? You are not disclosing the revenue.
Yeah, so as we mentioned, we will be going in an important geography, which is an international location, which is of strategic importance to us. And this is considered strategically as the first, climbing up the first ladder of getting into this particular market. And eventually we will be also discussing the second phases of collaboration with the client by the time the plant will be ready and getting on stream. So obviously it is in alignment with our aspirations of getting into the newer markets, both surfactants and specialty chemicals.
Mr. Kulkarni, so let's get this straight, that will this EPC business that you will be entering into, would that be a separate vertical away from the core business that you have? And part 2 of my question is, what is the geography that you are talking about of strategic importance? If you could tell us, which geographies are you aiming for for the said facility?
Because of our confidentiality, declarations with the customer, we may not be exactly identify the market to you, but I can definitely share with you This is geography wherein we don't have a footprint, and we would be certainly looking at leveraging this going forward as a strategic growth agenda for our business.
Is it the Americas? Is it the Americas? Is it Europe? Is it Australia? Is it one of the three?
These are the markets where we are organically not present right now. So
Exactly, which is why I asked you. Is it one of the three?
Yeah, I think I should not say that right now, but I think when I articulate this is where we are organically present, that means my answer is very clear to you. And as far as EPC is concerned, obviously it will have an impact, a positive impact that will have into into our revenue, but we will not be able to disclose the specific financial details of the transactions.
So, Mr. Kulkarni, the EPC business will be a separate vertical. Is that correct?
We are not stating that as of now. This is a part of our strategic alignment with this key global account. So we will be, with this initiative, we will be going significantly up the value ladder with this particular client.
Got it.
In terms of our core business is concerned.
This part aside, what about fatty alcohol prices? Have you taken any price hikes in the fourth quarter so far? And in the fourth quarter itself, are you on track for 6 to 8% volume growth guidance?
Look, fatty alcohol prices, as you know, still continue to be hovering in the higher range, and we are all looking at how the market will respond post the palm oil conference that has happened. We are all waiting and watching that. Our position is already very clear in the market. We have, as discussed during the last conference, we have slightly moderated our numbers to about 4% instead of typically 6 to 7%. Mainly coming from the headwinds in Indian market. The international story is quite positive, and as far as India market is concerned, I think one more quarter we will have to see. There are positive signs in terms of the investments which are happening on infrastructure, as well as certain announcements done by government. We expect our customer segments to have an uplift and effect, but we'll have to wait and watch for one more quarter to see that impact. And that's why we have done a moderation in that particular number.
No, that moderation was for the full year, right? Moderation earlier, you said the full year would be 6 to 8%, and then it'll come down to 4% for the full year. I'm asking specifically for the fourth quarter. Have you seen any green shoots, or is it still...
Fourth quarter showing all the signs of, just extending what is happening the story in quarter three. Yeah.
All right, Mr. Kulkarni, thank you so much for sparing time and joining us today. Wish you good luck for the new venture and for the road ahead as well. The management there of Galaxy Surfactants on the road ahead for the company. We take a short break. The Nifty has suddenly turned awry from the highs of the day, now nearing that 22,500 level on the downside. We get you a chart check on the other side with Pritesh Mehta of Yes Securities. Stay tuned.
Coming back, there's a bit of a tug of war which is going on in the Nifty, and the tug of war is between the Nifty Bank, Nifty IT and Reliance. If you just take a look at the markets at midday, every time there has been a big dip, it is Reliance which is supporting the Nifty higher. But at the same time, every time there is a big up move, we have the IT index, which is down by about 1.5%. Remember, the Nasdaq was down by about 2.6% overnight as well. So that's putting a bit of an upward lid on the frontline index itself. But no taking away from Reliance. Just look at Reliance, up around 3.5%. In the last few minutes, we've seen a couple of these IT names also come in for some bit of buying, IT and banking in particular. So pull up the intraday chart of TCS. Infosys is the top dragger on the Nifty. Reliance is the top gainer on the Nifty, or the top contributor to the Nifty. Pull up the intraday chart of TCS. That's moved into the green, and Kotak Mahindra Bank as well. So if IT and the banks come back to the party or reduce the losses that we've seen, maybe with the up move that Reliance is showing, Nifty can go into the weekend with a big melt up itself. So that's something we'll most definitely keep an eye out on. The advanced decline tells you that there is strong support at the lower levels. We have way more stocks advancing than the number of stocks which are declining. The mid-cap index tells you that there's a cut of almost 1/3%, but the advanced decline still firmly in favor of advances itself. what's playing out today in the option space. Hormaz, there is a strangle which is being sold, which is a 22,600 put, and we have a 22,800 call. So all the writers are hoping for this broad range of close to around 22,400 to about 23,000 itself on the market, because the combined premium of 22,600 call, 22,600 put and the 22,800 call is roughly 200 rupees. So 200 on either side of 22,400 and 23,000. What if their trade goes wrong? You sell you buy the 22,200 put for about 38 rupees, and you also buy the 23,100 call for about 7 rupees. So all in all, you are pocketing a premium of 200 rupees, and you are protecting yourself by buying options worth around 45 rupees. So the net premium that you've gained is close to around 155 rupees. That's the trade that is playing out in the option space itself. So I'll keep an eye out on how this market pans out over the next 3 or 4 days. Hindustan Copper is one of the stocks, typically goes into F&O band sometime in the middle of the series. We are closer to the middle of the series, and we have Hindustan Copper where the market-wise position limit is close to around 93%. After 95%, the stock goes into F&O band. So maybe one of those stocks that enter F&O band. But speak about the tug of war in the markets itself. The big tug of war everyone will be watching out for will be this Sunday. We have India versus New Zealand, the ICC Champions Trophy final. And thankfully, the trophy is on this side, which is the side of India. We have Pritesh Mehta joining in as well. Pritesh, we ask you about the market calls every once in a while, but tell me about the call. Are there any chart checks that prove, the outcome of the India-New Zealand ICC Champions Trophy game before you talk about your market views?
No. We all are cheering for one team, that is India. It's due for a while now. So I think India is going to be the victor.
Where is the resistance? Where is the support? Support is with India, but resistance is New Zealand.
I can talk about the drivers of the Indian team. It is going to be Rohit Sharma, Virat Kohli, and Mohammad Shami.
Wonderful. So these are the 3 picks from the Indian team. What about the New Zealand team? Are you shorting someone in particular there?
Yes, I'm not keen on Rachin Ravindra doing well for New Zealand. So I think let's keep it on the short side.
All right, New Zealand short, India long. That's your call for the for Sunday, Hormaz.
Well, sticking to that then, Pritesh, who do you think among the Bulls or the Bears would be strangled down the leg side next week? What are the charts indicating?
This is markets that we're talking about now.
So, if we look at the intermarket setup or seasonality, everything points to one direction, that March is an opportune time to buy into Indian equities. See, yes, Nifty in calendar year Q1 tends to underperform both on absolute basis and relative basis against the MSCI EMs and World Index. But if you look at the study of the last decade of the month of March, if you look at the returns for the Nifty mid-cap and small-cap, we tend to provide a return of more than 2% every year. Every year in the month of March. So I think even sectoral trend tends to be positive. So I feel that we have seen improvement in the market breadth, our customer market breadth. When I talk about market breadth, it's Nifty, mid caps and small caps also. Also, we have seen a rebound from 2-year mean in our customized top 10 Nifty index. So I think when we took everything together, we are I think we are likely to move progress forward in the month of March.
What about specific stocks then, Pritesh? Not cricketers, of course.
So yes, metals has been in limelight, and I think it's continued to do so because DXY is going to take a tumble yet again. I'm projecting a downside of 101 at least in next couple of weeks. So metals will be in focus. JSW Steel is the one stock that will life on the pack. We are focusing a target of 1200 and stop loss 950. We have seen a bullish turtle breakout taking place, a series of anchor column coming into play. It is already showing signs of outperformance against the metal index. So this one to watch out for. Second one is Chambal Fertilizer. Now Chambal Fertilizer is at the level which was seen back in June 2024. So this stock is now showing resilience, trying to surpass 8-9 month peak, and we can see a bullish turtle breakout taking place. So I think we recommend a buy for a target of 640. Stop loss would be around 540.
All right, and we'll speak on Monday once again. Hopefully that with the Champions Trophy with us. Pritesh, thank you so much for joining in and giving us your view on the markets as we speak. The market's now fighting back once again for the bulls. 22,565 is where the Nifty is at. With that, we'll slip into a short break. As we do that, let's give you some good news as always. The India business news leader, which is CNBC-TV18, is now just a click away. It's not just your television screens, it's on every screen that we can find you. You can watch us on the all-new app. You can get instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips on the go. Download the app. What are you waiting for? The Apple Store or Google Play Store. In case you don't have any of those, just scan the QR code. It'll redirect you to the link that will give you the CNBC TV18 app. With that, you can watch us on every screen, not just the television, but even on your phones at your fingertips on the go.
Welcome back, and shifting our focus now to the auto sector, precisely the two-wheeler sector, and Sudarshan is joining in to fill us in on the details about why Bajaj Auto and Hero MotoCorp have underperformed their peers this month. Sudarshan.
Well, I thought, Sudarshan, you'd come on a bike, which is the one that you prefer from a riding standpoint. Is it Hero Moto, is it Bajaj Auto, is it Eicher Motors, or is it TVS?
So personally, I had Hero's Extreme, but today I'm here to talk about especially about Bajaj Auto and Hero MotoCorp's underperformance.
All right, so let's talk about that.
So the Indian auto sector has faced a significant downturn in the recent months, with the Nifty auto index declined 25% from its record high hit in September 2024. However, the severity of the fall has been particularly pronounced in the two-wheeler segment, especially in Bajaj Auto and Hero MotoCorp, which have each slid 40% from their peaks, and this compares to a 21% decline for TVS Motor and 11% drop for Eicher Motors. So the key question is, why have Bajaj Auto and Hero MotoCorp underperformed so drastically? Let's break it down. So first, let's take a look at the retail market share trend. Bajaj Auto in the beginning of FY25 had a market share of 13.7%, and now also its market share is around the same level. For Hero Moto though, it has been a big slide. In April 2024, its market share was more than 31%, and from there it has fallen to 29%, that is a fall of 250 basis points. In contrary, Eicher in FY25 so far has gained market share of 70 basis points, and for TVS it's a gain of almost 200 basis points. So next important metric is domestic wholesales. Companies report wholesales at the start of every month, and picture on this front well looks the same as retail market share. In the first half of FY25, the growth of Hero MotoCorp, Bajaj Auto and TVS was in the range of 10 to 15%. But in the second half of the year, that is from October 2024 to February 2025, Bajaj Auto and Hero have seen a fall of 10%, 5% respectively, while Eicher has seen a growth of 15% and TVS a growth of 7%. In resultant, the growth in FY25 so far for Bajaj and Hero is 3% each, while for Eicher it's 6% and for TVS it is 11%. Now let's take a look at one more segment, that is exports. It's a crucial segment for Bajaj Auto and TVS Motor. Due to the muted domestic growth, the export contribution to total sales has risen for both companies. For Bajaj Auto, exports now account for nearly 50% of total sales, up from 34% at the end of H1 FY25. TVS has also seen an increase in export contribution from 22% to 30% over the same period. However, when comparing export growth rates, Bajaj Auto has significantly underperformed TVS. In H1 FY25, Bajaj Auto's export growth was only 7% compared to 16% for TVS, and this trend has continued in H2 FY25 as well. And because of that, in FY25 so far, Bajaj Auto has seen 15% export growth against TVS growth of 23%. Now let's talk about the valuations. In September 2024, the valuations had surged with all the stocks hitting record highs. Bajaj Auto's one-year forward PE had surged to 37 times, Hero to 25 times, Eicher to 37 times, and TVS to 47 times. Where does it stand now? Well, the correction in stock prices brought valuations back to historical averages. Bajaj Auto is currently trading at 21 times, same as its 5-year average. For Hero, it is 14 times against the average of 17 times. For Eicher, it's 29 times, same as the 5-year average. And for TVS, it's 34 times against its 5-year average of 32 times. So what's the conclusion? Data of last few months indicates that Bajaj Auto and Hero have underperformed peers on most metrics, and while high-end bike segment has continued to see a strong demand, entry-level segment remains a drag or say a concern. On the export front too, we saw Bajaj Auto underperforming TVS. So what's next? We'll have to see how the month of March pans out. Bajaj Auto in the last interview with CNBC-TV18 has talked about recovery by the end of this month or early next month.
All right, Sudarshan, thank you so much for that, taking us on a ride on, Bajaj Auto as well as Hero MotoCorp's underperformance. Whether there is recovery or not is something that we will keep an eye out on over the next month or so, as promised by the management of Bajaj Auto. Take a short break, come back, get you more on the markets and a lot of individual stocks which are on our radar.
Welcome back. Now on to stocks like Bharat Electronics, RITES, RVNL and Kalpataru projects who have announced new order wins. Vamakshi is here to take us through the details of all of them. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, a lot of stocks in focus today on the back of order wins. First up is Kalpataru projects. The company has bagged new orders worth 2,306 crore in the T&D space in both the overseas market as well as they're also building projects in India. And with this new order inflow coming in, the order intake till date in FY25 has now reached 22,500 crores. Keep in mind that the company had earlier on guided for an order inflow run rate in FY25 between 22,000 to 23,000. So with this announcement, they've managed to achieve that guidance. Bodes well for the company. The stock is up in trade. RVNL is the next counter. They've received letter of acceptance from Southwestern Railway. This is worth 156 crores. BL has bagged additional orders worth 577 crores since its last announcement on February 20th. And with this, the total order intake for BEL so far in FY25 stands at 13,724 crores. However, unlike Kalpataru projects, BEL had an guidance of almost 25,000 crores. So there, in order to achieve that mark, they would need some additional orders coming in. So we'll have to wait by and see whether or not the company is able to match that guidance. And lastly, keep an eye out on RITES. They've received LOA from South Central Railway, and this is worth nearly 28 crores.
All right, Vamakshi, thanks a lot for that. Those are a bunch of stocks which are on our radar. Then meanwhile, just keep an eye out on the screen, the bottom of your screen. The Adani Group is in focus. Mind you, no listed company gets impacted by this, but this is an important business interest and, city interest story as well. No listed company gets impacted. So once again, we'll just reiterate that the Dharavi project win is under scrutiny as the Supreme Court has ordered creation of an escrow account for payments. Adani's Dharavi project win is subject to Supreme Court's ruling. The Supreme Court has questioned Maharashtra government's award of Dharavi redevelopment to Adani Group because Seychelles-based Seclink has made a plea. So we'll just keep an eye out on this story. Perhaps at some point get in Ashmit to give us the nuances of this as well. But once again, reiterating, this has nothing to negative from a listed group perspective because there is no listed company that gets impacted, but an important business interest story and those interested in the real estate of Mumbai as well. Take a short break, come back, get you more on the markets and a lot of stock specific action. When we started the show, the Nifty was mildly higher. Then in the middle of the show, it went mildly lower. Thereafter, it went mildly higher. And now as we speak, we're towards the end of the show, the Nifty is absolutely flat. So that's all we'll do. On that photo finish, we'll wrap up on this edition of Halftime Report. For all the market action, it is Business Lunch that you got to watch after this short break.